Hello everyone. So today I came up with the top 100 adjustments for PGBP applicable for the Jan 26 exams. This can be continued by CA Inter as well as for CA final student because essentially the adjustments are same because the act is same, PGBP is same. Maybe extra syllabus can be there for final, but whatever the adjustment that we are going to discuss now applicable for both Inter as well as for final. I will try to cover each and every important adjustments that have already come in the exams, either in RTP, MTP or something like that, such that you will be exam ready just in 10 to 15 minutes. So I'm going to cover the top 100 adjustments that you need to keep in mind before going for exam to crack 14 on 14 for the PGBP. Okay, let's go into that. Continue the full video and close it such that you will be exam ready in 15 minutes. Let's see. First one, section number 28. Section number 28 do not have a great amount of any practical question. That's a theoretical question being a charging section. So it's more like a theory question. What are the charging section? Inside that they may ask a normal MCQ in a theory part. Okay, that's not an adjustment. That's only a theory question. 29 section is talking about there is nothing to ask in 29 because 29 section says that while calculating the income from the head PGBP, you need to consider from section number 30 to section number 43. Various deductions are available, various adjustments are available. Consider between 30 and 43. This is said by section number 29. So nothing to ask in exam. As of now, no question was tested also on 29 because there is no scope to ask. It is only just like a charging section ki additional scope. Next, 30. Now comes the main part. From here, your adjustments will begin. Let's start. What is this? Let us see. Rent, rates, taxes, repairs and insurance. Okay, there are 5 things covered. Rent, rates, taxes, insurance. Okay, rent, rates, taxes, insurance and repairs. On what? Building is only covered here. So immediately you should remember one thing. Exam la building ki repairs adjustment came. Immediately in mind you should get, okay, there is a section called as section number 30. In that section number 30 it should go. Okay, if the premises is occupied as a tenant, means there is a building you occupied as a tenant, then repairs are deductible if it is actually paid by the tenant. So in the question they have already asked, see, every adjustment I am putting here, the top 100 were tested either in past exam question, study material, RTP, MTP. Cover these 100 adjustments properly. That's it. Solving questions become cakewalk for you. That's my word. Okay, continue and complete. So if the premises is occupied as a tenant, then repairs are deductible if it is actually paid by the tenant. So question la you are given that you are the tenant to the building and you borne the repairs, then it is deductible. Next, if the premises is occupied as a owner, then rent is not allowed as a deduction. I told this in regular classes 100 times. For example, I have my own building. In that building, I am carrying on business. Notional rent not allowed as a deduction. Reason, whenever building is your own, okay, it's a self-occupied property. Self-occupied property, but house property will not get attracted because house property you should use it for your residence or let out, not for your business. Therefore, what will happen? You are not subjected to IFHP. You are subjected to PGBP. In PGBP, if you claim rent as a deduction, okay, saying that I am using this building, if I use a rental premises, I would have paid a rent of 50,000. Therefore, 50,000 is a notional rent. Then what about depreciation? You are also claiming 5% or 10% depreciation on building or not? If it is a water treatment plant is used inside the building, 40% depreciation you are claiming or not? How many times you will take deduction? Rent one deduction, notional rent, and second one depreciation. Both can't be claimed at once. Therefore, since if it is your own building, you are claiming depreciation on that building. Therefore, rent is not allowed as a deduction. Next, if tenant incurs any capex on a building, very important. I am a tenant. I am incurring capital expenditure on a building. There is a 4-floored building. I constructed 5th floor for my purposes. Tenant. For that 5th floor, whatever the capex you made, for that, tenant can claim depreciation. Okay, next one. In section number 31, the most important adjustments. It covers repairs, insurance. If plant and machinery is covered. Means what? 30 covers building, 31 covers plant and machinery, but only repairs and insurance is covered. Repairs and insurance is covered. Okay. Sir, I took a machine on lease. Rental. Okay, rent paid on plant and machinery. Allowed or not allowed? Not allowed as a deduction is a wrong answer. It is not allowed under 31. It is allowed under section 37. Any expenditure which is wholly and exclusively incurred for the purposes of business, which is not capital expenditure in nature, which is not illegal in nature, which is not a defraction of any law, which is not any default of any law. If you are incurring any revenue expenditure, then it will be allowed as a deduction. Next, asset must be used for the business. So the plant and machinery should be used only for business. Sir, I am using 40% for business, 40% for other purposes. Then what to do? Then you can apportion between business and normal. Next, current repairs are only allowed. Sir, what do you mean current repairs? This is applicable also for the building adjustment. Current repairs means I am using accrual basis of accounting. They will give question like this. Assessee is using accrual basis of accounting. Okay. Last year, repairs are incurred. Those repairs he paid in the current year. Okay. Current year. Now, current repairs means current year repairs are allowed as a deduction. Last year, if you pay this year, that will not be allowed as a deduction because section clearly use current repairs are only allowed. Okay. Current repairs are only allowed. Okay. So anyway, when you are incurring accrual basis, now accrual basis payable already you might have taken as a deduction. So that's the point. Next, very important section, section 32. What it is? The king of the entire PGBP, depreciation. You can see here 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 different kinds of adjustments are there. Important points and adjustments in depreciation concept. See here. First, P&L account is given. In that, depreciation as per the books was given. Depreciation in the P&L account is as per the AS, accounting standard. And for the purposes of computation of income tax, it shall be first added back. So, depreciation deducted and net profit is given. First from that net profit, add back the depreciation as per the books prepared as per AS. And later allowed as per IT rules. You know, rules law, percentage will be there, block, all these things. Additional depreciation is allowed only if the assessee opts out of alternate tax regime or a default tax regime. If assessee is following default tax regime, additional depreciation on the new assets or new plant and machinery installed will not be allowed as a deduction. Additional depreciation is allowed only for the new plant and machinery installed during the year. Additional depreciation of 20% is allowed if the asset is used for more than 180 days. And in all other cases, 50% of the 20%. Means what? 10% will be allowed. Next, computer installation is eligible for additional depreciation. All these are exam questions already tested. So be very cautious and careful. Next, if any asset like car used for both the personal and business purposes, then depreciation allowance is proportionate. For example, there is a plant. I use that, there is a machinery, there is a computer. I am using for my personal as well as for the business. Okay, depreciation will be there na, proportionately to what percentage. For example, 300 days is a working days. In 200 days I am using for business, 100 days I am using for my purpose, means 100 on 300 will be 1/3, 200 on 300 will be 2/3, 2/3 will be depreciation available under the business, and 1/3 will not be allowed for the business because it is not used for the business purposes. Next, any plant and machinery installed in office do not entitle additional depreciation. Very important. Multiple times this question got tested in exam. Any plant and machinery installed in office do not entitle additional depreciation. Depreciation you can claim, but additional depreciation should not be allowed if it is used in office. It should be used only in the manufacturing factory. Next one. TV per se means normally is eligible for depreciation at the rate of 15% as a plant. But TV connected to laptop. Okay, I'm not using TV normally as a TV. I'm using it as a secondary device for the computer. For example, various academies, if you see, TVs will be there. Those TVs, they don't use it for the TV purposes in reality. No cable connection, no dish antenna connection, no Tata Sky, no Airtel. They are connected to various screens to project to the students. In that case, those TVs are not considered as a TV. They are computed as a part of computer only. They are treated as 40% depreciation. Very important. So, but the TV connected to laptop or any other medical or such other equipment. For example, in hospitals, multi-specialty hospitals, they will have surgery equipment. Surgery equipment, whenever the doctor has to see through robotics they are doing surgeries. Somewhere they have to see now what is happening. They will see on a TV. Their TV purposes is not for entertainment. It is not for decorative item. It is used for the medical equipment. It is eligible for 40% depreciation also in this case. Okay. Next. It may also be assumed normal TV. Question TV, that's all. Nothing is said in the question. You have three assumptions. Assumption 1. TV as a decorative item. It will be treated as a furniture and fixtures, eligible for 10%. No, sir. TV attached to laptop. TV attached to laptop. Then in that case, 40%. No, sir. TV is not a decorative item for me. It is used within the factory. Then 15% depreciation is allowed, depending on the assumptions you take in exam. Next one. If an asset is used for personal purposes, very important. If an asset is used for personal purpose, brought into business, then following is the consequence. If that asset is a building, okay, for example, it is a self-occupied building. I made it as a Pgbp building. What to do? Again, from the value of the asset, they don't allow depreciation. Actual cost on the date of acquisition of that building minus if you would have used from the beginning as a depreciable asset in the building, in the business, how much depreciation would have been allowed? That much you reduce. Balance will be treated as an actual cost for the purposes of depreciation. Next. Sir, I can tell you logic also. Everyone listening to this already attending the workout sessions for Pgbp. You know already what is the reason for this. This is only adjustment discussion. I am not going deep into the analysis. Okay. Quickly we have to complete. If it is any other asset other than building, cost of acquisition will be treated as actual cost for the purposes of claiming depreciation. Next one. 33AB adjustment. Composite business. Coffee with agriculture and non-agriculture. If the company carries on a composite business like tea, coffee, rubber, then computation is as under. Step 1. See, they will give a question saying that companies carrying on curing, growing of coffee. There are two items in that. One agricultural, second non-agricultural. To what extent agriculture, to what extent non-agricultural, rule already said. 7A, 7B, 7C rules are there. Rule already they said 25%, 75%, 30%, 70%, 60%, 40%. They already said there. 35, 65 percentages were already given in the rules. That you have to remember. Okay. But how to compute, I will tell you. See, first of all, do the problem as if it is only Pgbp. Okay. So, compute the net income as if entire income is from the business. Claim depreciation, everything you do. Finally, the net income will come in that bifurcate into business and agriculture. That percentages we should remember. Computation will be same. Next. Very important, 35. Scientific research. See, current year scientific research, 100% allowed. Current year capital expenditure on scientific research, 100% allowed. Is revenue, is capital. Unabsorbed capital expenditure on scientific research. Okay. Set off again is the current year business profits after deducting the current year scientific research expenditure and depreciation. Very, very important. Last year's scientific research expenditure, which is unabsorbed, is already there. Then how to adjust it? This year, calculate the profits. While calculating, reduce this year current year scientific research. This year depreciation. Okay. Then you have to set off the unabsorbed scientific research expenditure of the previous years. Next, if you are not understanding what I said, I mean in one go, pause the video, go back, listen to the words again, and then come again. Okay. Payment made to approved university is allowable under 35(1)(2), but not allowable if assessee opted for default tax regime. Hey, again I am repeating. Entire scientific research expenditure is not allowed for default tax regime. Only two things are not allowed. 35(1)(2) is not allowed if you are opting for default regime. 35(2)AA is not allowed if you are opting for default tax regime. All other scientific research expenditures are allowed. Are you understanding? So payment to approved university, okay, is not allowed. And contribution to an approved program by IIT, etc., not allowed as a deduction if you opt for default. Sir, no, sir, I am not under default, I am under normal tax regime. All scientific research expenditure is allowed as a deduction to you. Okay. Next. Contribution to private colleges do not qualify deduction. For example, for KMR classes, one person made a research. I am doing statistical research for stock markets. One person donated me 1 lakh. For him, it will not be allowed as a deduction because I am not an approved college or I am not an approved university. Next. Expenditure for purchase of land do not qualify deduction. Almost all questions will have this adjustment. See, they will tell land cost 1 lakh, building cost 2 lakh, total cost 3 lakh. To the extent of land cost is not allowed. Pre-commencement scientific research expenditure is allowed as a deduction if it is spent within 3 years immediately preceding the commencement of business. Okay, what does it mean? Listen, they will tell commencement of business happened in 24-25 previous year. Okay, 23-24, 23-24, 22-23, 21-22. In these 3 years, whatever the capex you incurred for scientific research, fully that amount will be allowed in the year of commencement. So more than 3 years before, if you spend anything, that will not be allowed as a deduction. Mark my words clearly. If you didn't understand, go back to the video, listen again. Important adjustment. 35 AD, very, very important for exam. Okay, I have separated all the golden points of 35 AD. Okay, let's see. See, deduction not allowed if assessee opted for alternate tax regime. The first point. So in the question they will clearly ask, compute as per default regime, compute as per normal regime. Normal regime 35 AD will be allowed as a deduction. Default regime not allowed as a deduction. If deduction is claimed under this section, no depreciation is again allowed. Means 35 AD la capital expenditure la plant and machinery you purchase. Land and building you purchase, building. Land anyway no depreciation. Building you purchase, you take full deduction under 35 AD. Again on that as a depreciation is not allowed. If deduction is not allowed under 35 AD, owing to reason for opting for ATR, alternate tax regime, then depreciation is allowed. So if 35 AD is not allowed because of alternate tax regime, then depreciation on that assets will be allowed. Next one, capex on scientific research ki 3 years go back. Any capital expenditure incurred on scientific research will be allowed as a deduction the previous year of commencement of business. But here 3 years limit also not there. Okay, so no need not be preceding 3 years like 35. Capex on land is not allowed. Same. Next one, loss under section 35 AD can be set off only again as another specified business under 35 AD. Normally you cannot set off. Next, asset to be used for specified business. Very, very important. Whenever you are taking deduction under 35 AD for any asset, capital expenditure asset is there. 8 years you should use. How many years? 8 years you should use. 8 years beginning from the previous year in which such asset is acquired. From that time, 8 years you should use. No, sir, I used for 4 years and then convert it into normal business asset. For example, I am having 2 businesses, specified business, cold chain facility, and second business is a retail business. From here, I shifted to specified business, and what to do? Then deduction whatever you claimed minus depreciation that would have been allowed if I use from the beginning in the business will be deemed to be the income. Then non-specified business you transferred, you will claim depreciation. What will be the actual cost? Actual cost to claim depreciation later on for the next years is actual cost to the assessee originally minus whatever the depreciation allowable, balance will be treated as an actual cost. Okay, go back, listen to my words clearly what I said. Next, 36 la golden points. Good adjustments are there also in 36. Okay, see here. Interest on loan is a deductible on accrual basis provided capital borrowed is for the purposes of business. Means what? Loan taken, interest not yet paid, allowed on accrual basis. Allowed on what basis here? Accrual basis. Okay. Interest on loan can be for any purpose in relation to business. As vehicle loan it can be, building loan it can be. And specifically for this purpose only you should take it, not there. Business purposes it should be. Except for personal purpose. Personal loans ki interest if you pay, that will not be allowed for the business. Very, very important in 36 is, I will tell, then you can read. Employer, employee, 2 people are there. Employer contribution to PF should be deposited either within the due date of PF Act or within the due date of filing return of income, then I will allow. Okay. But employee contribution to PF should be deposited within PF Act only. Okay. So for example, I have to pay within 15th of a month. 15th of a month. But I did not deposit within 15th of a month. But I deposited within the due date of filing return of income. It's a contravention. Amount will not be allowed as a deduction. Lifetime, it is a disallowance. So next year I paid, that year will you give deduction? Employee contribution, that rule is not there. So employer contribution towards PF is deductible if it is deposited within the due date of filing return of income. But employee's contribution is deductible only if it is deposited within the due date under EPF Act. Payment of fire insurance is a deductible expenditure under 36. Here 37 is a bunch of items are there. So many exam questions came on 37. One by one. Postage and telegram, deductible expenditure. Printing stationery, deductible expenditure. Loss on sale of shares, debited to P&L account. What to do? Loss on sale of shares is a capital loss. It should not be under business. Though in P&L you are showing it, that loss is not a real loss. Na? Add back to the profit and show it in capital gains. So loss on sale of shares debited to P&L shall be added back and considered under the head capital gains. Dividend credited to P&L. Really it's not an income. Reduce, show it in other sources. Agriculture income credited. Okay, as agriculture income is not a business income. Reduce that from business income first and exempted under section 10(1). Administrative charges is allowable deduction provided they are used wholly for the purposes of business. Next one. Any commission paid debited to P&L account, paid to related parties and unreasonable, added to the extent unreasonable. Means what? For example, my brother is there. I am paying commission to my brother for bringing the sale. Normally in the market, commission will be 1%. I paid 11%. The 10% is unreasonable, added back to the profits. Not 11% is added. 11% amount will be there. Na? For example, generally people pay 1,000. I paid, say example, 11,000. That extra 10,000 will be treated as a unreasonable expense added back to the profits. Any expense paid not brought into the books, a very important adjustment here. I made a payment. Bank statement like it is there. Okay, but that was not brought into the books as an expense. That's called as an unexplained expenditure. Black money transaction they can call, or any illegal expenditure they might have put. Unexplained expenditure will be taxed at the rate of 60% plus 20% plus 4% under 115 BBE. First you have to reduce it from the business expense, added back to that. It's not a business expense. Add back to that. Profit will increase. Bring it back. That amount will be deductible. That will be charged at the rate of 60 plus 20 plus 4% under IFOS head. GST penalty, very important adjustment here. GST penalty paid, either CGST or SGST, anything. Whenever you pay penalty will be paid for two things. Normal procedural non-compliance. Okay, if you pay. Normal procedural non-compliance means what? I have to file within that particular thing, but I did not, but I did it by paying some interest, etc. Normal kind of things, GST penalty paid will be allowed as a deduction. But if it is for an offense committed, it's not allowed as a deduction. GST penalty paid, disallowed if it is towards an offense. If it is only delay in filing, then allowed as a deduction. Assume accordingly in exam if the question is unclear. If question is unclear, assume any one of them. Okay, GST penalty is paid, which is a non-compensatory in nature, is an offense, then not allowed as a deduction. You have to assume accordingly. Any asset like car used for both business and personal purposes, proportionate disallowance is made. Next, donations in relation to business, very, very important adjustment. Again, you will get doubt in exam. Donations, I did not pay donation, I received donations. Okay, donations in relation to business. Okay, if I receive, separate will be there. Donations when you accept. But if you pay donations, which is in relation to the business related key, when you make a donation, allowed as a deduction. Very, very important. I gave advertisement, not in any magazine, etc. In a souvenir issued by a political party. And indirectly you are contributing, so not allowed as a deduction. Donation to political party is not a business expenditure. Add back. This advertisement is a direct political donation, not allowed. But 80 GGC, 80 GGB allowed. Any penalty for breach of law, is not allowed as a deduction. Any entertainment expense on staff is assumed as wholly and exclusively for business and is allowed. For example, in the P&L account in exam they gave entertainment expenditure towards employees. You should think that you are giving that only for the refreshment in the course of business, allowed as a deduction. Most of the MNCs in India are conducting weekly some festives or something like that. For that they will spend for their entertainment purpose. It is only to promote our business. They will work more for our business. Allowed. Family planning expenditure is allowed as a deduction in 5 installment, but only to a company. That's why remember, individual is given in the question and family planning expenditure disallowed because it is allowed only for company, that too in 5 installments. Personal medical expenses of self, parent, family members, etc. is not deductible. Very, very important. Expenditure on CSR is not a deductible expense. Or security transaction tax. Commodity transaction tax is a deductible expenditure. If an expenditure is allowed on accrual basis, see here, any expense paid more than 10,000 per person per day, more than 10,000 is completely disallowed. What happened is rent payable, I shown in the P&L. Rent payable, I did not pay. Outstanding rent is there. But accrual basis, I allowed as a deduction. 20,000. Next year, that 20,000 rent I paid in cash. Already deduction taken, 20,000 paid in cash. The year in which you paid it in contravention, that year it will be added back to your income. Okay. So see here, you can see. If an expenditure is allowed on accrual basis and in the subsequent year if the payment is made in a mode other than specified modes, in excess of rupees 10,000, then the amount allowed as a deduction will be deemed as an income for that previous year. Next, gratuity fund if you transfer, deductible. Provision if you created without any transfer, not deductible. Disallowance not attracted in respect of payment made for purchase of agriculture produce directly to the cultivator, even if it is more than 10,000. 6DD rule is there. Exceptions are given. This was asked in exam. That's why I quoted this. Next, 38 nothing, no deduction, no great questions are never tested in the exam from 38. Next one, 40A. In section 40A, what are all the core adjustments that you need to remember? Is the TDS default. If payment is made to non-resident for interest, royalty, fees, technical services or other sums on which TDS is not deducted, or you are paying to a resident any sum, deduction TDS is not deducted, then 30% will be disallowed. Very, very important adjustment. Okay. So 30% disallowed this year. Na? Next year I deposited TDS, then that year I will allow that 30% as a deduction. Income tax paid by employer. Very important adjustment again. Income tax paid by employer in respect of non-monetary purposes provided to its employees is exempt in the hands of employees and not even deductible in the hands of employer, because it's not your business expenditure. Some other person's expenditure you incurred, not allowed as a deduction. Any salary paid outside India, very, very important. If you are paying salary to a person outside India, TDS should be deducted. If not deducted, 100% is allowed. Next, 40B, again important. Even the assessee opted for presumptive taxation under 44 AE, and though all deductions are presumed to have been allowed, it is restricted to section 30 to 38 only and not to section 40B. Sir, I didn't understand. See here. If you opt for 44 AE, okay, business of flying vehicles, etc., then what will happen? 30 to 38 deductions are presumed to have been allowed separately. They will not allow anything again. I will discuss again in 44 AE. Just listen carefully now. So what will happen in that case that 44 AE, whenever an assessee opted for, then he will not be separately allowed for any kind of deduction under 30 to 38. 30 to 38, 40 is not included. Na? Therefore, even if you are carrying on a presumptive business, expenditure on payment of interest, salary to the partners is allowed. Next, maximum interest allowable is 12% on capital. Question 15% will be given. 3% is disallowed. Next, in case of a firm or LLP, book profit computation shall not include interest on capital and remuneration. Means when you are calculating book profit, that should not include interest on capital borrowed and remuneration. Means what to do? In the question, if they gave interest on capital and remuneration, first add back to the profits, compute book profits, and then 12% only deduct, and then you have to calculate the profit, book profit basis remuneration. How much it should be calculated? Up to 6 lakh book profits, 90%, which comes to 5 lakh 40. Balance, for example, 9 lakhs is the profit. Balance 3 lakh 60,000, 1 lakh 80. So totally how much will be allowed means 7 lakh 20,000 will be allowed as a deduction. Like that you need to understand. Or actual remuneration, whichever is lower. Okay, next. While calculating book profit, depreciation shall be adjusted. Means booklet depreciation should be added back. Rules prakaram depreciation should be deducted, and then book profits has to be calculated. Next, 40A, another very, very important section. Unreasonable salary, add back to the extent it is unreasonable. One-time cash payment in excess of rupees 10,000 per person per day, and entire amount is disallowed. Transport operators, owning, flying, 44 AE batch, 35,000 per day per person is allowed, not 10,000 for them. Section 40A2, Unreasonable transactions are applicable only for very, very important adjustment here. See here. For example, my sister is there. I am making her a payment salary as an accountant. Normally, accountant will be paid 30,000 per month. I paid her 60,000. 30,000 disallowed. Now reverse. I sold goods to my sister. FMV of that goods in the market is 60,000. I sold to her only at 30,000. Balance 30,000 is unreasonable. That will not be added or deducted because the reason is section 48 is applicable only for expenses paid, not for incomes. So not for the sale transactions, So unreasonable transactions are allowed, okay, are applicable only for expenses and payments, not for sale. Salary is paid in excess of 10,000 per person per day. Salary also included into the payment. Sister-in-law is not a relative. So excessive payments which are unreasonable is not disallowed. Account payee check, account payee bank draft, electronic clearance. Crossed checks are not account payee checks, and therefore any payment made by crossed check in excess of 10,000 is treated as if you paid in cash. Entire amount is disallowed. Next, 41. Bad debts recovered in the year in which you recovered, that will be deemed as an income. 43. Again, you can see 43. So many adjustments are there. 43. Any payment incidental to acquisition of an asset shall be included into the cost of asset. Correct. So anything, for example, freight paid. While acquiring the asset, while purchasing an asset, I paid freight. Whatever the freight you paid will be added to the actual cost as per section 43. Okay. But if that freight amount, whatever you paid is in excess of 10,000 other than by account pay, check, etc., in simply in cash if you pay, to that extent you cannot add to the actual cost. Means you cannot claim depreciation to the extent of that cost. Even any acquisition is made in excess of 10,000 per person per day is also includable into the actual. Okay, see here. So even any acquisition of assets made in excess of rupees 10,000 per person in a day also not includable into the actual cost. Okay, what does it mean? Any acquisition of assets made, I acquired an asset by paying 45,000. Okay, 45,000 payment I made in cash. That asset also should not be added to the actual cost. Hey, when you are calculating depreciation to the actual cost, you will add additions to asset. If you pay in cash and acquire that asset, it's not allowed. Next, rates include GST. Any GST paid before due date of filing return of income allowed as a deduction. Okay, so rates include GST payment also. Any GST paid not within due date but within the due date of filing return of income allowed under 43B. Next, any term loan interest paid after due date of filing return of income, after due date, is before, disallowed in that year, allowed in the year of actual payment. Conversion of unpaid interest, a very important adjustment. I am not paying interest. They converted interest into principal. Okay. Conversion I will not allow as a deduction. Conversion made means you did not pay. That converted loan amount you will pay na. When that loan amount is paid, to the extent of that loan will be allowed as deduction, because though it is a loan, interest converted into loan it is, so that will be allowed as a deduction. Most important is amendment. 90% chance is there to come in the next exam. Payment made by assessee. Okay, assessee is there. Paid to supplier of goods or services. That person supplier is in registered under Micro and Small Enterprises Act. Okay, then allowed under the following circumstances. You paid. Okay, deduction is allowed under the following circumstances only. Refer ISM for illustration and meaning of MSME. Open study material. 43 section you go. Which one? 43 section you go. Amendment is given in dark bold letters in study material. Read that. Question will come in exam. So there is an assessee. Assessee made a payment. That payment is made to a supplier. That supplier is registered under MSME Act. It is a micro or a small enterprise, not medium. Micro or smaller. Yes. Then whenever you have to make a payment, payment is allowed as a deduction only if you make the payment within 15 days. If there is no agreement between you and him to make the payment. If you agree within 45 days, you should make the payment. Okay. Even if you are following accrual basis, within 15 days, within 45 days, you should make the payment. Sir, I am using accrual basis, sir. Means, though it belongs to the previous year, though it is paid in the next year, accrual basis I will allow. No, you should actually pay within 15 days or you should actually pay within 45 days in order to claim deduction. Next. 44 AD, presumptive taxation. To opt presumptive tax regime, okay, to opt presumptive tax regime, presumptive, not alternate tax regime, presumptive tax regime under the following conditions shall be satisfied. Okay, first, any business other than business as mentioned in 44 AE. Okay, but it should not be 44 AE business. Turnover or gross receipts in the previous year does not exceed 200 lakh. Okay, 200 lakh in the relevant previous year. So your turnover or gross receipts should not exceed 200 lakh in the relevant previous year. Or total turnover or gross receipts in the previous year should not exceed 300 lakh in the relevant previous year. And aggregate cash receipts not exceeding 5% of the total turnover or gross receipts. And not or. Sir, I didn't understand this. See, either your previous year turnover should not, gross receipts should not exceed 200 lakh. That condition you satisfy. Or second, sir, it exceeds 200 lakh, sir, but I will allow up to 300 lakh provided your entire cash receipts is not exceeding 5% of total turnover. Means 250 crores, 250 lakhs is my gross receipts. Normally not eligible, but you will be eligible if you can show that your total cash receipts in the 250 lakh is not even 5%. Is not even 5%. Next, while considering gross receipts, it should be considered inclusive of taxes. Net receipts, if given in question, you should calculate the gross by doing this adjustment. Net receipts divided by 1 minus tax. Next, 44 ADA. Same, yeah, everything is same. Instead of 200, you put 50. Instead of 300, you put 75. That's it. 44 ADA. That is for 44 ADA. 44 AE, you can see so many adjustments are there. Once 44 AE is opted, it is assumed that full effect has been given for 30 to 38 and no further deduction is allowed. Okay. However, no restriction under 40B. Just now I told salary, interest, etc. to the partners will be paid because it is under 40B, not under section number 44 AE, not under 30 to 38. If assessee owns more than 10 trucks at any time, ineligible for 44 AE. So they will give a question. Heavy vehicle. Heavy means what? The gross vehicle weight, okay, should be more than 12,000 kgs. Then I will call it heavy goods vehicle. So what is a gross vehicle weight? Vehicle weight plus authorized load, permitted load. Together we will call it gross vehicle weight. Okay. Next, presumptive income for heavy goods vehicle. Heavy goods vehicle income will be presumed not on the basis of monthly, on ton basis. How much is the gross vehicle weight? Sir, gross vehicle weight is 15 tons. 15 into 1000 for each month. Per each month. So, rupees 1000 per ton per month or for a part of month. Even if one day is there in a month, I will continue it as a full month only. Next, presumptive income for small goods vehicles. Okay. So, heavy goods vehicle, this is a small one. So, in this case, what will happen? Not on tonnage basis, 7,500 per month or for part of month. Must to do study material illustration. One time you do that, again doubt will not come. Must to do. I am telling must to do. Read this, stop, go to the study material, do the illustration, come back. Next, if in question, both books of account details and tonnage details are given, first solve normal provisions without applying 44 AE. And take the business from plying, hiring, claim depreciation, claim all expenses, calculate net business income. Then gross receipts into percentage you have to calculate 8% or 6% depending on the type. Okay, apply and then calculate. Compare and tell which is more beneficial. Must to do study material question. That's why I'm telling you. 44 AE, 3 study material questions are there. ISM illustrations are there. Do those 3, you'll get full clarity. To apply presumptive tax scheme, the only requirement is to have the ownership on vehicle, not putting to use. Put to use is not eligible. If you own the vehicle, that's it. Whether you put to use or not, I will calculate income on that. No, sir, I did not put to use. Therefore, don't calculate income on that vehicle. No. Limit under 40A3 is 35,000 instead of 10,000. Already I told. Next. 44 AA, one is books of account and the one tax. So it's a direct theory question. Next, other points. See, these many other points are there. Whenever closing stock undervaluation is there, add to the profit. Okay, closing stock undervaluation, because it reduces the income, add it. Undervaluation of opening stock, less. Overvaluation of closing stock, less. Overvaluation of opening stock, add. Non-operating incomes in P&L, such as interest on FDs, etc., is given. P&L credit. First, deduct from the business income, consider under IFOS. If house property details are given in the question, consider it under the head IFHP and remove it from P&L. Note that for SOP, what do you mean SOP? Standard operating procedures, sir? Self-occupied property. Interest on housing loan is not allowable if he is opting for ATR. If he is opting for ATR, that you have to remember. Brought forward business loss shall be eligible for set off after computing the profits of the business. So compute this year profits and then you have to adjust. Any donations under section 80G given in the question shall be added back while computing the business profit and deducted under section 80G. Very important here. Royalty on patents received by person carrying on manufacturing business is not a business income and therefore deducted from P&L account, means or reduced from the profit and treated under IFOS. Income tax refund credited to P&L account shall be reduced from profits by calculating business income, because income tax refund is not a business income, because income tax is not a business expense first. Interest on income tax refund, okay, this is our extra income, but it's not a business income. Reduced while computing business income but treated under IFOS. Payment to political party qualify for deduction under 80GGB or 80GGC but not under Pgbp. Next, any gifts received in the ordinary course of business is a business income considered. Means any gift received from dealers, okay, it's a business income only. Add to the business income. These are all the core important 100 top adjustments under Pgbp. We covered just in 35-40 minutes. So please listen to the entire video. Thank you very much. We'll be coming up with another video. Thank you.